Hi, and welcome again to today's edition of Market Analysis for Friday, the 30th of September. I'm Giovanni Benacourt, operator and educator with Vantage Markets. Well, it is, as the quarter draws to a close, it's a good time to look back at where we've been and ahead to what the future holds. In this case, neither is a pretty picture for markets. To say it's been a rough year feels like dry understatement. The S&P 500 hit a new closing low for the year yesterday. That was triggered in part by a downgrade for Apple, a stock that looked invincible this time last year. Shares of Apple dropped roughly 5% yesterday as Bank of America downgraded the iPhone maker to neutral from buy. Analysts also lowered Apple's price objective by 14% from 185 a share to 160. As we view the slowdown in services and relatively lackluster iPhone lead times as indicators that consumer spending was slow, weaker earnings and valuation risks may loom. Yesterday's marked the second steep loss for the iPhone maker this week. On Wednesday, the stock saw a separate 4% slide on reports that the company shelved plans to increase production for the iPhone 14 this year due to weaker demand than expected. In addition to acting as a bellwether for consumer sentiment, Apple has been an important part of retail investors' portfolios over the last few years. A deeper sell-off in the stock could be the last straw that forces retail investors to throw in the towel, and the same goes for Tesla stock. Apple and Tesla account for 34% of the average retail investor's portfolio. This year, both companies have outperformed the S&P 500 by a healthy clip. But because of that, any big drop-off in either of their respective stock prices could trigger a wave of selling. The final nail in the coffin for individual investors' P&L might be a positioning puke in these two equities. Bizarrely, while stocks have had an awful time, things have been even worse for bonds. The traditional source of risk-free returns are down more than 30%. We reckon that more than a decade of global bond returns have been erased this year, a first in 7 decades. It seems that traders can just look at the 2-year note to determine how to trade the stock market. If the 2-year note moves higher, stocks move lower, and vice versa. If the 2-year moves lower, the stock market moves higher. To be sure, it hasn't been a relentless drop straight down. The chart will look like the Great Rocky Mountains receding rather than a lone Mount Fuji standing on the horizon. And it's not unreasonable to hope that stocks will find a floor soon. The Dow Jones Industrial Average managed to bounce back up from about 30 points in June, and that's roughly the point where we are again now. But it's hard to see much cause for optimism about the fourth quarter. The Federal Reserve and other central banks aren't done hiking interest rates, probably not even close. Inflation is uncomfortably high, even though oil prices have been retreating for months. The labor market remains strong and will seem to only be able to weaken from here. All the major indexes are at record lows for the year. With Thursday's losses, the Dow Jones Industrial Average joins the S&P 500, Nasdaq, and the Russell 2000 in bear market territory. So let's talk about the VIX. After hovering around the mid-20s for the past 90 days, the VIX has moved up to almost 32 and is near its peak for the year. While this suggests anxiety is growing, the VIX is still short of the point of panic signified by reading above 40, a level hit in every bear market since the VIX was first launched 29 years ago. And its current level, the VIX, is implying daily moves in the S&P 500 index of around 1.7% or 61 points in either direction. Equity traders should consider reducing their average share or even waiting on the sidelines. It's unlikely the spate of volatility will abate anytime soon. So traders must determine whether profiting in this environment is likely. If not trading is also a valid choice, at least until the market shifts to a more favorable environment. It's probably a stretch to expect a Christmas miracle over the festive quarter. And with that being said, let's take a look at what the markets have entitled for us today. Yesterday's movement in the market gave us a low of 1190 roughly. The moving averages, just like you see, just like we spoke yesterday, that they were above the market and market was coming to it and finding resistance. It is, they act as a dynamic resistance. Market did come to them, and the sell-off began finding that bottom at 1190 and rebounding from here. Okay, but it was short-lived. It really is looking to the market for a continuation of that selling wave that we saw yesterday. The RSI, it is in neutral territory, so we can continue to expect another attempt at that 11,000 psychological level. But obviously, we need to first see if we are going to come back down to 1190, or perhaps are we going to be trading, just having consolidation right around our pivot point. That's another scenario. As long as for the S&P 500, the same token goes. RSI is neutral. Look, it's trading right. The market is right below the 52-week moving average, acts as resistance. So both moving averages are above the market and continue to add pressure to the market. So we first need to have the market trade above the 200, okay, for us to think that the market has found its bottom and it's going to continue to leg higher. And then we have the Dow Jones Industrial, which is just lingering right around the 52-week moving average, which acts as a resistance, and I'm a resistance. So RSI is neutral. Expect another leg down on this one, or consolidation. That could be another choice. Then we have crude oil. Crude oil, it seems to be looking to trade down. Next week is going to be a big important week in crude oil. The OPEC Plus or other parties is going to come out. They have their meeting, and they're looking to cut production by 1 million barrels. So if we have the OPEC coming out and cutting production of 1 million barrels per day of crude oil, what do you reckon that is going to happen, or what that is going to cause? Which movement crude oil will move? The most common sense will tell you, okay, it will probably move higher. All right, that could be the case, but you could never know. So, but at least have that on your radar for next week. The 5th, October 5th is the date, okay? And then we have natural gas. Natural gas is looking, yesterday it did trade higher. It found resistance right around $7.10. It sold off from there, finding back support around 650, and it has been on consolidation, trading below the 52-week moving average, barely trying to trade out of it, but the 200 caught it, gave it the resistance, and from here it's been selling off. So will we see that continuation, or will we see this movement again for the remainder of the day? I think this will be the case, the second consolidation stage. Then we have gold. Gold is trading off the 52-week moving average, as we came to find the golden cross right here. So from here, it has been doing higher, moving higher, finding support, coming down to the 52-week moving average and finding that support, looking to perhaps consolidate around this level and stay here for the rest of the day as the RSI is in the neutral zone. Or it could make another attempt at coming up to our resistance. 1700 could be the short-term target. Then we have here silver at the same given token, trading off of the 52-week moving average. Find right now support at that level. The RSI is pointing lower, however, but we do have the 200-day moving average right below it. Could it trade between it? That could be a case. So as for silver, I assume that I'm looking at silver to continue to move above or within the moving averages. So another attempt at our resistance here. Then we have copper. Copper has just really tried to come back up, back to 350. The 50-week moving average is acting as support right now. The pivot point is right also on there. So could this be that support that the market needs to make an attempt at 350, where the miners need this price to be favorable for them to continue mining? So that's the indication. That is the consensus to be bullish on copper. Then we have Bitcoin that have really just been just really flat, trading, speculating, just fluctuating around a pivot point within our moving averages. That could probably continue. Then we have here Euro. Euro is in a consolidation stage, trading between our moving averages. This right here could be an indication that the market could stay inside this channel of the moving averages, just trading up, rebounding off of it, and just continuing this lateral movement, horizontal movement, consolidation movement, however you want to call it. That's most likely the case, as long as it trades out of either one of them. If it trades out of the 52-week moving average, it could be tell us that this can be another attempt to come back up to 99, going back up to parity, or will it trade below and break the 200 moving average and come back down to 0.96, where a pivot stands? So that could be those scenarios, but I'm more in favor. It's Friday, more in favor that this will remain inside this channel of the moving averages. Then the pound has really recouped itself. It's really just trading off of the moving average and our pivot point. RSI is also neutral. Will we see that continuation? 111 could be that psychological resistance level, and could we see another nice calm day for the pound? That's yet to be seen, but I think that's the case also. Then we have the Japanese yen looking to come back to 145, but it's just really holding here around 144 and a half. Then we have the US dollar, Canadian dollar. As long as the crude oil doesn't make any strong movements, we could probably continue to see the Canadian dollar trade above our moving averages. And then let's talk about the VIX. Right, the VIX is right here. 32 is that level where we probably, if we come back up to it, more volatility will rise. Anything trading above our resistance, 33, 34, will mean more pain for investors. Let's take a look at the dollar index. Dollar index is trading below our support level. Let's update that and let's use this 11,500 seems to be the conundrum for the dollar index. 113 will be our resistance. Okay, that's it for right now for me. Have a fantastic weekend, and I'll see you on Monday.